Wanted to run through some of the USDA numbers that came out yesterday. We had some numbers for cotton harvest progress, and we can run through those right now with you. So let's take a closer look here, and we'll actually zoom in on some of the key producing states first. Texas would lead that list, and as of Sunday, they were 30% complete with their harvest. That compares to a 5-year average of 22%, so they are ahead of schedule. Georgia, 27% done. Their average is 21%. Mississippi, 46% complete. They're lagging their 5-year average of 54%. Alabama, 33% done. Their average would be 30. And North Carolina now has 20% of their cotton crop harvested versus a 12% average. Wanted to touch on some winter wheat seeding numbers too, and a lot of folks wondering just how much progress was made in that regard. And on the top states here, the top 5 producing states, Kansas, 42% seeded versus a 5-year average of 75%. Wow, they're way behind schedule. Oklahoma, 57% done. 5-year average is 76%. Washington State, 79% complete. Their average is 86. Colorado, 84% complete. Their average is 92. And Montana, 81% done with their winter wheat planting, and their average would be 86%. Wanted to point those numbers out. Let's find out what's going on the trading floor in Chicago. Let's go there live and direct right now and talk with Todd Bubba Horwitz of BubbaTrading.com. There he is. How you doing there, Todd?
Good morning, Marlon. How are you?
Happy Tuesday to you. And what's the mood on the trading floor on the grain side first?
Well, not much going on. We're still extremely quiet, but I would give the grains kudos for holding up as well as they're holding up right now, considering what's going on with some of the other markets, like crude is falling apart and gold is getting clobbered, and the dollar is rallying. Not that I really put a lot of stake in the dollar right now, but I think that soybeans only down 6 cents, still above 9.77, and corn and wheat both higher. I give them a lot of credit. That shows a lot of strength to me.
Okay, so we had overnight corn sales reported over 250,000 tons, I believe, overnight. And the corn market opened up about a penny weaker. Now let's take a look at where it is now. You mentioned it turned around. It was about a penny higher last time we checked. Now it's back to unchanged. 350.5 is our last trade. Very narrow trading range, only about 3 cents wide. July unchanged as well at 379 3/4. Let's move on to that soybean trade. As Todd mentioned, we had a weaker tone there. Still down 6 on November at 9.85 per bushel. January down 6 1/4 at 9.95 1/4, and even July is down a nickel at 10.22.5. On the wheat trade, though, here in Chicago, December 2 1/4 higher at 438 3/4. July up 3. Kansas City wheat, we have December now trading at 435 1/2. That would be up 1 3/4. New crop July of next year would be 2 1/4 higher at 486. And in Minneapolis spring wheat trade, we have December currently trading at 613 1/2. That's now 4 cents higher. July up 5 1/4. Cotton market, we currently have the December contract now trading 33 points higher at 67.86 cents per pound, kind of firming up again after a kind of a tentative start. All right, Todd, as we get into the second half of the trading session here, what do you think is going to be driving the markets now the rest of the day?
I think that they're really just, all the markets are kind of linked together right now, and we're really just all slow, and there's not much action going on. And I think everything will take their keys off of the equity markets. And when the equity markets continue to rally, which they might hit 23,000 today, that would be an indication that, to me, that would be a good spot to sell those and look to buy others. I think this is a great time to be stepping in and looking for solid levels. For example, in corn, I mean, it's been in 345 to 355 for the last 6 or 7 weeks. Wheat's the same kind of pattern. Those are two I'd like to be an owner of. Soybeans, if they get back to 977, I'd like to buy those there. So I think we'll see some money start to flow in here, I think, as the Dow continues to peak, because again, the volume of the Dow is also way down, and so is volatility. So I think they're going to see some money start to move this way pretty soon.
Interesting. All right, we'll talk a little livestock trade when we come back in just a moment. Our guest, Todd Bubba Horwitz of BubbaTrading.com. Don't go anywhere. We'll be right back. So the Dow Jones Industrial Average still up about 19 points right now, and the dollar value on the U.S. dollar index is still about 400 points higher. Definitely something to keep an eye on here. We are talking right now with Todd Bubba Horwitz, BubbaTrading.com in Chicago, and I want to focus now on the livestock trade here. We had the cash cattle market that had a bit of a rally late last week. Early this week, we don't have much in the way of anything going on. Maybe a few had that sold yesterday, maybe $1 weaker on a live basis out there. But the market seemed to be firming up on the futures trade this morning. How come, Todd?
Well, I think the futures look pretty solid. I thought we targeted 119 in the fat cattle and looked for a pullback to 115, which is basically what we've gotten. I think you look for higher prices. They may consolidate in here a little bit and kind of churn back and forth, but I'd certainly be a buyer of fats on any bit of a pullback. I think that, in fact, I'm working orders right now myself to buy at 116 and a quarter. So, I mean, I'm looking to be a buyer here. I think that that's a solid level. I think we go up and at least test that 119 level again, if not get through it this time. I think feeders still have a lot of room to go on the downside. Now, they've held up remarkably well in a real tight consolidation pattern, but overall, I think the feeders are going to come back under 150. That's where we'd look to possibly step in to buy there. But overall, again, we tie in, markets are slow, the economy is slow, everything is slow, so there's not a dramatic amount of action anywhere, which brings the volatility way down, which really reduces the amount of movement we're going to get from a day-to-day basis.
Does that concern you? Because we were higher right out of the open this morning on the cattle complex, and now almost everything is currently lower, at least as we head into the midday.
You know, it doesn't give me a lot of concern here. I've still got pretty solid areas that I want to get in, so I'm happy that they're a little bit lower so that I can get myself in. But I think that this is what you get when you have a market that has no volume and no volatility. You'll get this drift up, which we had in the opening. I thought they were like 117.50 or so, and now you're getting the drift down. But at the end of the day, they're just going to drift and churn back and forth until they have a reason to either go lower, and you'll see some volume and volatility come in, or until they go higher. And I believe that they'll go higher from here, but that's always the concern when you're dealing in markets that are extremely slow.
Okay, let's run down the prices for everybody on the live cattle trade right now. As I mentioned, most contracts have turned lower now. October is still up 48 cents, but of course the most active volume would be more in December, which is down 4 now at 116.78, and February down 4 cents at 120.88 per hundredweight. Feeder cattle side, we have November feeders now trading at 153.98. That'd be down 57 cents on the day now. That's about 85 cents off our earlier high. January down 65 at 151.90. Lean hog trade had firmness on the nearby contracts today, and right now it's kind of gone lower here. We have the December down 28, and we have February down 18 at 68.12. We took out resistance overhead yesterday, Todd. Does that mean that now we're back below what used to be resistance, or what?
You know, again, this is a slower market, but there was a lot going on between October, which came off the board, and December. And I believe you're going to see now that December, after today, I think we start to look for lower prices. I would not be surprised to see them close much lower today. I think we're going to see a push back down to at least 60, but I'm still targeting 58 before I would look to be a buyer myself. And I think that's really the area we have to see. We've gotten a little bit carried away, but if you remember, during the October-December, the spread was huge, and then October made a big run right at the end of the contract, and of course squeezed that down a little bit. But I think we're going to see that the pressure is going to come in here, and we're going to see some selling come here in the December hogs.
All right, Todd, thanks for the information. Todd Bubba Horwitz of BubbaTrading.com in Chicago. Check out that website. So there you have it. A bit of a turnaround here in the livestock trade in the last half hour.
2 thumbs up from Todd at the end as well.
Yeah.
Well, I think he likes how you pitch his social media pages, which are actually really helpful. He's got a lot of great information there. Okay, thank you so much. Markets editor Marlon Bowling.